Welcome to Markets Now. I'm Michelle Rook with Joe Kooima of Kooima Varilek. Seeing a lot of red on the board this morning in grain and livestock futures, except for, I think, winter wheat. And as well, we are seeing maybe the deferred lean hog futures trying to pull back up here. All right, Joe, let's talk about the cattle market. First of all, I think we had a gap lower opening. This is all in response to what? This phased in reopening of the border to Mexican imports?
Yeah, this is directly correlated with that. We started seeing some of those announcements later afternoon yesterday, 3 to 4 o'clock. They're going to be phasing to open up the border down south, and they're starting with the furthest one away, starting July 7. And as long as that one's good and all the inspections are good with the cattle coming through there, then the next week they'll open another one and kind of just go through all those protocols until they have 5 open there here in the next little while. So yeah, certainly kind of a shock to the system here a little bit. We saw the feeder index rise in a couple bucks yesterday, but the news with this reopening is certainly shattering the opening here currently. So yeah, we're gonna have to kind of brace here for a little while. This isn't necessarily a black swan event necessarily, but yeah, we've been closed for 6 months. We probably backed up 600,000 cattle coming from the border there. Not that they're all going to come in at once, but this is something the futures will take into effect.
Well, not only that, Joe, but I think a lot of folks had thought that we wouldn't see the border open until maybe towards the end of the year. So that might be the little bit of the surprise here, don't you think?
Yeah, the big surprise, definitely, because yeah, we were all kind of maybe sleeping on it a little bit that it was going to stay closed for a while. But I think down south they're definitely going to push for more of an effort to. We got to get that thing open. Our pins. We don't have a lot of cattle, and our pins. We're missing all those numbers that we're used to. We got a good cattle market right now. Let's get some stuff coming over. So I think there could have been a little bit of a push there.
Yeah. But Joe, we haven't had like a lot of, even when the border reopened for that time, we didn't have a lot of cattle that were coming across. It hasn't been like a deluge of any sort, has it?
No, not at all. I mean, like you said, a few weeks there we were open and they're trickling in, they're still going through a protocol phase, so we'll take a look at this in, the next 10 days and, make sure that everything is, good for July 7. And all the cattle went through and they didn't find anything on them. So it's still a phase, still a day by day thing until we get there. But the futures will take note of this because that fly is still 600-700 miles south, and they are releasing millions and millions of those sterile flies as we speak here, just to keep it down there. So the futures market is going to have to. You're going to have to see, some kind of a oops, we're closing it again for the prices to recover. But I think we're 2 weeks away from that yet.
Yeah. So the close today will be important to see whether we can work this through in a day, or does it take longer than a day to work this news through the futures, you think?
I'm going to be cautious here. That don't think this is probably just a one-day thing. You have the funds that probably have close to half of the open interest. In the feeders especially. So they're going to need a bigger reason to say we're going to stay put with what we got. Otherwise, if this is going to continue in the fashion that we have and start doing some technical damage, funds they're quick to say we're out of here. They're not going to hope and pray that it's going to recover, and they're looking at the northern feed. The prices up here. They'll just say we've had a good run here for the last year and a half being long, and we are just going to get out. So remain very cautious for the time being.
So I was impressed, though, how the futures the last week or so had been actually rallying in light of the fact that we had lower cash for 2 weeks in a row here. So hopefully we don't have to go down too far, you think?
I don't think we have to go down terribly far. We do have a discounted market structure, and I think
right, that's what I'm getting at. With that discount, will that hold that?
I think it can for a little while. We had an end of the quarter, end of the month type stuff too, and I wonder if we just kind of, for the fats, I wonder if we just kind of reset the bases. Severe discount last week, and then Friday had a nice rally. Monday had a nice rally too to kind of get that $20 basis in the north, and I wonder if that's kind of what it was doing there. June carried. The cash to June carried a huge basis like that. And I wonder if we're just going to start with that. But cash being, not just a little weaker last week, but quite a bit. I would assume that the market's anticipating that we're going to be weaker still. The leverage is a fine line between the producer and the packer. And I think we lost that here a little bit. And it always takes a while for that producer to gather that leverage. And it always seems like the packer can get that stuff basically overnight. So it's a cautious phase here in the marketplace. I can't say that enough. Be cautious right now with everything going on.
All right. So cash down on the weighted average, $5.37 last week. So you think we'll be a little lower again this week?
That's where I would start with, be a little bit softer. Don't expect that we're going to recover right away. We have a little bit of a short week here this week with the holiday, and sometimes that can be good for the producer, but I think losing the leverage there. The Packers last several weeks have gone out, 2-3 weeks to gather some cattle around them. So I think they're sitting okay as far as inventory goes. The cash wasn't a big amount of cash last week, just for the fact I think they got some cattle around them.
Right. Okay. So hogs have kind of corrected since the hogs and pigs report, but we've also seen cash and cutouts start to kind of roll over a little bit here. So what is contributing to kind of this setback that we've seen?
Great question. And my thinking is that, yes, the cash and cutout have lost some momentum. So I think that's why this market is starting to break just a little bit. The hog and pig report, it doesn't jive with anything from our producers that we have at all. And we could see that Friday. It opened up lower and closed higher because I didn't believe some of those numbers, especially the 50-pound and under class. So I would assume that we're breaking right now because we need a correction. It's had a huge rally the last 2 months. The funds have a nice long position on there, but I think they're starting to come out just a little bit. But you got to keep that bull fed, and even in the hogs as well.
Well, and we kind of ran up to some chart resistance, so we probably should assume we need a little bit of a correction here anyways, right?
Right. Yep. We had a gap that we left a while ago. So that August projection was up to that 112.5 to 113. And that was kind of a number I had in my mind. And once we got July there to that where August was at that price level of 112.5 to 113, it's like, this is probably enough for now. But it's a little phase here. Let's break it back just a little bit. I still don't hear great things out there as far as farrowings. We cannot contain this disease that continues to happen. It's chronic. It's not acute like it has been in the past few years. So, not quite record prices, but high priced ice weans and feeders for this time of year specifically, which is uncommon to have. I don't think we've had this high of ice weans and feeders open market since back when we had that first big bout of PED.
Right. And so that's why those back months, those deferred contracts continue to be kind of supported on these breaks then, right?
Yeah, especially the fourth quarter, which these are big prices for the fourth quarter, but the diseases that we hear, the issues out there, I mean, you're seeing it today with October and December not getting hit as hard, and kind of some bear spreading activity going on there because I don't think the numbers will show up yet. Just that our production has been down so hard.
Right. All right. Grains are mostly lower this morning, as we mentioned. Corn and soybeans, we didn't really get anything super bullish in the reports yesterday. So we're back to trading weather and improved crop conditions, huh?
Right. Yep. The weather continues to be very non-threatening. Forecast models continue to show chances of rain here and there throughout most of the belt. And yeah, our good to excellent rating for corn jumped up 3% yesterday, which was a surprise to the marketplace there. And the funds are short. They don't have a big reason right now to come out of any of their positions. And you look at a weekly chart, there's a gap that we left maybe last year, the year before, right below $4, like $3.95 to $3.98 or something like that. So I do believe that's going to offer some support there. And September is not too far away from that. So once July gets off the board, that's the number I'm going to be working at. Last year we bottomed the market out in the last part of August to kind of get that harvest low situation going on there. But for right now, the funds aren't threatened with the short position that they have.
Now let's hope we can hold $4 here for sure. All right. Thanks so much, Joe Kooima with Kooima Varilek. That is Markets Now.